Eneraqua. There we go. So 99. Like I say, they had final results out. It dipped, took my stop loss, and then rallied a bit. Because like I said, you can get, liquidity events on final results. Companies that are in there hold a bigger chunk. When you have final results come out, there's a lot more volume going through the stock, and so people can use that to exit, especially if they see the results as not impressive, which not really, but this is a recovery play that isn't recovering yet. They're showing signs of it, but they're not reporting. What you need to see is a trading update with absolute figures there. And like I said, they are specialists in energy and water. If you click the logo, they'll take you to the website. Okay, and what do we do? Energy, water, and they've got their own sort of they supply local authorities, and we know how much local authorities have been under the cosh. So that's the issue. There've been lots of delays on contracts, so they refit all these places with water and heating and all that stuff, eco heating and water. But it came to the market, with a bit of a promise. Look at a good company. They were, I think, 80 million. I think 80 million, and then they've now market cap of 13. Upside, apparently, the broker saying is 80 pence. Enterprise value 12. Net asset value 57. The volume isn't huge. Revenue 53 million. Now you think if they can turn a little bit, they can improve the margin on that, then even get up to like 5%, or net margin they can get that, then obviously they're quite undervalued, because what would that be? 2.5 million, 2.6 million profit, and that's what? 4 times PE. So a debt, they've got a bit of debt there, 5.2, operating cash flow 6.9, free cash flow 5.1, and you can see here that there's no growth. Okay, if you look at the scores here, the growth is in amber, the value is okay, momentum's dead, health seems okay, efficiency, no, not yet. But this is a recovery play, and I think it could be a good recovery play, but not yet. Maybe not yet. Once they come up with the trading update or interim results, so you need to put this on your watch list, I think. It's up to you, or ignore it. They may not even get there because local authorities are still having issues. They may get more and more delays. You never know. So, recovery plays can be hard. I don't want to sway it. One thing I would say, Eneraqua. Big fan of that name. Eneraqua. Why is it Aqua into Spanish? Oh, do they? I think they have things going on in Spain, don't they? So revenue growth is there. Operating cash flow improvement. Value, like price of sales is okay. Price to book is fine. Price free cash flow is good. By the way, these are interims, and these are full year results. Efficiency, gross margins, operating margin -13 because they're making loss. It's only above the 50-day moving average, like we saw on the chart there. ETP. So, there's a couple of metrics missing. Let's have a look at going forward. By the way, if you scroll down, these are the forecasts from brokers. I sometimes put my own sort of multiples on these forecasts, but they're saying, look at that, from 2024, they've got 84 million for 2025. And that's, so when did the year end? Yeah, it's the 31st of January. So we are into 2025 now. This is the year of 2025. We're into that. So it's 56% top line growth, they reckon. Now, these are forecasts, so don't take them, as gospel. 94 million, 105 million, 13 million. Like I said, if you, think a slight margin on that. But they're having a hard year. Like I said, operating profit lost 7.2. Look at that. Previous year, gangbusters. So there could be a good recovery play. Could be, but like I said, this is all in the forecast. And I see the upside here, decent potential. Well, I've got even on a sales multiple of 0.2, EBITDA of 3, a PE of 6, which is not a stretch, especially if you have decent growth like this. Then I'm still seeing 52, 53% upside. Ladies and gentlemen of the watchlist jury, what do you reckon? What's your thoughts on that? Is it one for the watch list, or is it one to ignore? Let me know. Thoughts on Eneraqua. As the chart isn't looking that promising, but let me go. First one in. Mark is saying watch list. David's iPhone. I don't know where David is, but his iPhone has joined. David saying not for me currently. Harris saying I bought, so I would say yes. yeah. ETP worth a punt. Ryan, let's not do punts. let's invest in businesses. But I know what you mean. I mean, if you can't be bothered with charts hanging around a bit, you can put a tiny little bit in, so it's insignificant. And then when it starts moving, but don't put any more in as long as it doesn't go anywhere. As I say, average towards your winners, not your losers. Ed, ETP, yes, in brackets, I hold. Yeah. Alan, ignore crowded market. Yeah. Yeah, well, that's the thing, you see. It's hard to judge the market, isn't it, sometimes, in this. And I think a lot of people talk about, markets and participants and competition and to management and all this stuff. When in actual fact, when it comes down to it, just look at the figures. Because it's hard to know. I'm not an expert in the markets or any markets of sectors, but if it comes down to the figures, the good margins, or the margins improve and the growth improves, then they are taking a bit of shit in our market, or or they've got contracts. So yeah, who knows? Phil, ATP, one for the watch list. Anyone else? Any more for any more? What are you saying? Yeah. Well, I'm saying this. I'm saying it's one for the watch list. That's that. I did think, but I think if it starts to recover, it could recover very well. Because if they can get a bit of margin on that kind of revenue, I mean, let's go back to the screen a second. What was it last time? Way up here. Let's scroll down. Hang on, look at that. Now they keep the market there, maybe before listing, but a 15% post-tax margin. Now, if they do 15% of 100 million, of course that's 15 million post-tax. That on a PE of what, 5 is what, 15 times 5, 75 million should be valued at, pretty much. And we're now seeing what, the 13 million market cap. There's potential here. I'm not saying they get that back to those margins, but if you do 10% or 5%, there's potential. But they've got to do it. That's the thing. They've got to do it. And in the forecast, what are they suggesting? They're suggesting well, it's just a margin. They are suggesting what 2, 3. Well, yeah. See, it's changed now. I don't see why. So maybe they're being a bit conservative on the margin. Who knows? But nevertheless, like I said, if they can do 3.4. And the share price the share price won't stay at this level. If it does 1.6 and 2.8, the share price won't stay at this level because they go back to profit. And that's the thing. How much cash they have? They did have sorry, I got to go on here. They had net debt, didn't they? So yes. So they had 6.3 of cash, but they've got debt of 5.2. So 1.1 of net cash. Maybe so I'm saying it's one for the watch list. But don't fall in love with it. And if you're holding it, don't plow any more into it. Wait until it starts recovering, I think. That's my thoughts on it. Anyway.